Mohamed, what do you mean, no more upward drivers? What happened?
So, Becky, we have sequentially lost three drivers. The first one was policy-led. That's what got us out of the March 23rd lows. The second one was fundamental-led, the reopenings, the healthy reopenings. Those have stopped. And then the third one was the retail inflows, the enthusiasm that got the reopening trade taking off and got us to the June 8th highs. Unfortunately, all three have run out of steam for now. And if you look forward, listen to what Scott said this morning. The issue with the infections and hospitalization is not going to go away for at least 3 to 4 weeks, if not longer. So it's not going to be fundamentals. It's not going to be technicals. The retail trade has been hit quite hard. So it has to be policy. So if we want to get out of this range, which is volatile and downward trending, we need more from the Fed. And that's getting tougher and tougher.
Although, Mohamed, I would say this week you do have Stephen Mnuchin and Jay Powell both are going to be speaking to Congress tomorrow. I think that would provide an opportunity, at least, for one or both of them to say something that the market looks at and says, aha, here's something we hadn't anticipated. Then you get the FOMC minutes that come out on Wednesday. And then on Thursday, we're going to get the jobs report, which who knows? We'll see what happens, what that shows. But any of those, I would think, could be either upside or downside drivers.
So undoubtedly, we're going to have more volatility, and we're going to have more of what we've seen in the last few weeks. The big question for me is, does Congress wake up? One of the problems of the good jobs report that covered May is that it created complacency. It divided Congress. And suddenly, we see very little momentum, and a lot of the relief measures are going to run out in the next few weeks. And that would be an additional hit. So my hope is very much like yours, Becky, that our lawmakers get the message that this economy is still facing considerable headwinds, and we can't face another downward trend. We don't want to lose the Q3 GDP bounce.
The one thing I would say is the places where the outbreak is most recently affecting could neutralize some of the lawmakers from those areas that had been opposed to spending additional money because it was things that weren't happening in their district. They thought it was a problem just in the Northeast or in California or other places. Some of those lawmakers, I would think, might have changed their minds about whether there should be additional spending just based on what they're seeing in their home districts, don't you think?
I hope so. I mean, remember, Scott said it's not just the Southwest and the South. 40 states have an R0 of greater than 1. Also, the steps taken so far are incremental. So there is need for relief measures. The last thing we want is bankruptcies and long-term unemployment, because that turns short-term problems into long-lasting challenges, both for the economy and for markets.
Hey, Mohamed, the jobs report on Friday, or Thursday, I should say, it's coming out on Thursday this week because Fridays the markets are closed for the holiday. On Thursday, what numbers would you be anticipating? What would be something that would surprise you either to the upside or the downside?
I don't know. I don't think anybody knows at this stage. I see two trends that I worry about a lot. One is that layoffs are migrating up. They're trickling up corporate America. They're no longer limited to the small and medium-sized firms. They have gone up. On the other hand, given that this employment report is going to capture the middle of this month, it is going to be capturing when the reopening was still going relatively well. So I don't know what that number is going to look like. I think it's going to be analyzed very, very heavily. But I don't think it's going to clarify really where the labor market stands because there's so many moving pieces right now. I think the short-term, the high-frequency indicators are the most valuable, and those suggest that in certain states, things are going well in New Jersey, in New York. But in other states, we're already turning around.